Dear students, we will learn whether the contractee will pay the full amount of work certified or not. If not, why? Different ways of recognizing profit in CA and other courses, format of contract account, important adjustments, the logic behind the formulas, and what to study in contract costing from exam viewpoint. Every construction company will have a contract price, which is the payment that will be charged to the client when the contract is completed. In our case, the contract price is 1200 crores and it is estimated that we will spend a total of 1000 crores to execute the project. We must prepare a contract account each year in order to assess our performance for that specific contract. Separate account is maintained for each contract to ascertain profit or loss. You go to the client and ask, please pay the amount, otherwise how can I carry out my work? You have your own setup costs. So you went to the client and asked, sir, please give me some money. I have proved that I have some work already done and work certified by the engineer is 200 crores. Please release 200 crores payment now. The client may not give you the complete 200 crores, but perhaps 180 crores. Sir, why would he only give you 180 crores? It is normal business practice not to pay the full amount until the work is completed. Thus, if you ask for 200 crores, you may not get it because the future is uncertain. If you are given 200 crores today for whatever work you have done, the customer will be helpless. If you disappear tomorrow or if there is any breach of contract, therefore the client gives you only 180 crores and keep the remaining 20 crores for himself. That doesn't mean you are going to lose the 200 crores. He will give us later. These 180 crores are referred to as cash received, but in technical terms they are referred to as progress payment or running payments, because as the work in progress, whatever money I receive from the client is referred to as progress payment or running payments. Cash received equal to value of work certified minus retention money. The client is now holding the remaining 20 crores and we will most likely receive payment later. These 20 crores are known as retention money. Money due that has not been given to you because the money is kept as a security by the client for the future defective work or contract breaches. It is known as retention money. Format of contract account. Whatever expenses incurred or debited to contract account. Direct expenses, material cost and labor cost treated as a direct expenses and the cost is debited to contract account. Indirect expenses such as administrative office, engineers, supervisors and common expenses are apportioned to various contracts on a proportionate basis. Contract account can be understood as a mini P&L account. Debit all the expenses for the given year. Important adjustments in contract account. Number 1. Any abnormal costs are transferred to costing P&L account. Example, penalty. Penalty shall not be charged to any particular contract. Instead, it is charged to costing P&L account. Second adjustment with respect to calculation of depreciation. Method 1 is regular type. Value of cost of machinery will be given and depreciation percentage will be given. Suppose there is a big machinery worth 50 lakhs and the annual depreciation is 10%. So depreciation is 50 lakhs into 10%. How much now? 5 lakhs. Debit 5 lakhs. Simple, the way we did in financial accounting. Another style, proportionate basis is very important. Same machinery is used by different contracts during the year. Let's say site 1 for 30 days, site 2 for 75 days, site 3 for 25 days and so on. It means you have to calculate depreciation on proportionate basis depending upon the usage of asset. First, you calculate total depreciation of that asset, then divided by number of days into multiplied by days for which that asset is used. Method 3. Suppose purchased asset worth 6 lakhs. Entire 6 lakhs debited to contract account. Now, you may surprise to find that in the modules and other books how entire cost is debited. It is a capital expenditure but treated as revenue expenditure. Sir, there is something mistake. The answer is no. What they will be doing at the end of the year by closing value of that asset. Suppose technical engineer estimated the value of asset 4,80,000. They will credit 4,80,000. Automatically depreciation is charged. How much depreciation is charged? Debit 6 lakhs, credit 4,80,000. Difference is depreciation. How much, Nana? 1,20,000. This type of charging depreciation will also encounter in contract costing. This is another method of charging depreciation is known as revaluation method. Opening value of asset, closing value of asset, difference in value of asset is depreciation. Third important adjustment, fixed assets sold. If the question is silent when the asset is sold, assume sold on the last day of the year to claim full depreciation. If any particular date is mentioned, calculate depreciation accordingly. Fourth adjustment, outstanding expenses. Direct wages paid 3,800. Direct wages accrued as on 31st March 2022 was 1,10,000. As per matching concept, when an income is recognized, the expenses corresponding to that revenue should be matched to ascertain profit. Some wages are paid, some wages are outstanding. We are following accrual system. Whether paid or not, if it is an expense, I have to record it. Direct wages paid 3,800 and outstanding 1,10,000. Fifth adjustment, prepaid expenses. Let's say wages 50,000, which included rupees 5,000 for next year. Contract account should be debited with 50,000 or 55,000 or 45,000 or 5,000. What's your answer, Nana? Contract account should be debited with 45,000. 50,000 less 5,000. How much? 45,000. Out of 50,000, 5,000 belongs to next year. That's why we are deducting. What are two items credited by work certified? Something similar to sales. By work uncertified. Something similar to closing stock. Credit minus debit. Either it will give profit or loss. When it is loss, it will be transferred to costing P&L account. Credit minus debit. Either it will give notional profit or loss. Notional profit is the excess of income till date on a contract. Sir, why it is called notional profit? Till the contract is incomplete, you keep calling profit as a notional profit. Notional profit means something which is not actual is called notional profit. While solving the sums, the main issue in contract costing will arise how much profit out of notional profit should be transferred to P&L and how much transferred to reserve. It means entire profit will not be transferred to P&L. It depends on percentage of completion. Listen carefully. For CA students, just listen and forget. And for CMA and other courses like BCom, BBA, BBM, MCom, it is very important. CE Institute has started de-recognizing those formulas in the new module. Whatever the notional profit or loss transferred to P&L fully, your work has reduced because first calculate notional profit and then apply formula. The main question in all contract costing problems is how much profit should be transferred to the P&L. It depends on percentage of completion. Percentage of completion equal to work certified divided by contract price into 100. Summary. For CS students, either notional profit or loss, as the case may be, transferred to costing P&L. But for other professional students, if it is a loss, entire loss will be transferred to costing P&L. If it is profit, how much out of notional profit should be transferred to P&L and how much transferred to reserve depends on percentage of completion. Percentage of completion equal work certified divided by contract price into 100. There are 5 formulas, Nana. First one, initial stage. If percentage of completion is less than, the profit to be recognized is nil. Second formula, if percentage of completion more than 25%, P&L equal to 1/3 into notional profit into cash received divided by work certified. We will discuss third word after few seconds. Suppose I earn a notional profit of 10 lakhs. I will not transfer entire notional profit to P&L. It depends on percentage of completion. In our case, percentage of completion, let's say 45%. First logic, transfer only 1/3 of notional profit to P&L. Retain the balance 2/3. Do not transfer entire 1/3. Transfer only that part which is corresponded to cash received divided by work certified. Work certified is like credit sales. Cash received is like collection from debtors. Second logic, that means I do not recognize entire 1/3 of notional profit. That too recognize only to the extent of cash received. Third formula, percentage of completion is more than 50% but less than 90%. Instead of transferring 1/3, I will transfer 2/3. P&L equal to 2/3 into notional profit into cash received divided by work certified. Reason is, more I complete, I have more confidence in transferring profit to P&L. Transfer 2/3 to P&L and keep 1/3 reserve. Fourth one, when the contract is more than 90% but up to 99%, we have 4 formulas, Nana. When we have those kind of questions, we will have a discussion about. Since I just write it plainly here, you might not understand it. So when we have a problem with that, we will have a discussion about it. Fifth one, fully complete 100% profit into cash received divided by work certified. Dear students, it's very important. Remember, for fully complete contracts, the balance portion of profit is recognized only upon receipt of retention money. What to study in contract costing? 3 segments are important. Number 1, computation of notional profit. Caution, for CS students, formulas are not applicable. For other students, out of notional profit, how much should be transferred to P&L depend on percentage of completion. Second segment, computation of estimated total profit. Third segment, escalation clause. Theory short notes, work certified, work uncertified, retention money, cost plus contracts are very important.